So I just finished recording the entire video, and then I look at my mic and I realize that it's not on. So roll it back. Roll it back. What's up, y'all? My name is Josh, and welcome to my channel, Watch Josh Trade, where I provide weekly live streams and educational content in order to help traders like yourself find an edge in this market. And I'm also sort of conveying to you how I am consistently finding an edge day to day. And I do that on Twitter at Watch Josh Trade, but I also do it in these monthly reviews, like what this video will be, November monthly review. And I do realize that it's December 19, and so this video is going to be a lot shorter than it would be if I were reviewing charts going into December. Instead, I'm just going to sort of review my process for November, where I was at, etc., and that'll be the end of it. So let's get right into it. The basic stats for my November was that I returned 8.25%, so it was green, it was good. But it was below average because SPY returned 10.88% and the Qs returned 11.20%. And I do not see, for reasons I will explain, this as a loss or as me performing below average, even though my portfolio return is below average. The main reason why I don't see it as a poor performance relative to SPY is because in the middle of October, I hit a peak in my account. And then from that middle of October to the end of October, I had a 10% drawdown. And this drawdown, as I covered in my October monthly review, which I will link in the description of this video, a lot of it was due to me listening to noise related to stimulus, related to vaccine, related to election, and it was sort of overwhelming my trading, or overwhelming my analysis, and I was not able to trade properly because my mind would apply this sort of outside news to the price on the chart, and oftentimes it's not correlated one-to-one, and that actually affected my mentality when I was trading. It affected the size and etc., the mechanics of how I was trading. So I decided in the first week of November to not trade. And I did this because I knew that the first week of November, the week of the election, it would be a hectic, news-laden week, and that I didn't think that I would be able to properly execute trades in a market when I was honestly focused on the election, and I was honestly expecting the markets to be overwhelmed, like fixated on the election. Instead, what happened was I missed out on the best week I think that has happened in SPY and the index and the overall market year to date, where SPY returned 7.23%. And I actually stuck to my plan. I was patient, I was disciplined, despite the fact that I saw a lot of opportunity. I was still like sort of aware of what was happening in the market. I was still keeping up with traders in my community, and they were just talking about how easy it was this week compared to the previous 2 weeks. And I was like, shoot, like the previous 2 weeks I had been struggling as well. This week probably would be easy for me to trade as well. But I didn't want to compromise my sort of process for getting back on track that I had set out for myself. I didn't want to compromise the discipline, the patience that I needed, because I just was chasing an opportunity, which is like sort of what I was doing in October in the first place. And so I decided I'm going to sit this one out. I'll come back next week. I'll be set. I'll be ready. This is actually going to prepare me well for a good November. And I think that was the right decision, even in retrospect, even looking at how much, the index jumped, and how much literally everything on my watch list jumped in that first week of November. So I came back on the first day of the second week of November, and I was ready. But there was more news in the background. The news was that Pfizer had come out with a vaccine that had a 93% efficacy rate. And this was like big news for the market. It like jumped up, and I was like, okay, in my mind immediately correlates. Pfizer vaccine news, market is up. And so I expected, just like sort of like looking at last week and whatever, there's just like news, like vaccine news. This is what the market had been waiting for. for us to continue up. And so I waited for the index to settle. I waited for the stocks to settle, and I just bought in. And I didn't like follow my sizing protocols, and I didn't stop out when we just kept going down. So Monday, just like turn to the November 9th chart, if you can, you'll see that we just went straight down on November 9th. And I was so stubborn, I didn't stop out of any of my positions until the bitter end. And I ended up having one of my worst days on November 9th after sitting out. Probably the best week. I had one of my worst days coming back, and that was really painful experience. And so from October 19th to November 9th, I had a 17% drawdown on my account. And this was not the first time that this had happened to me. I had two previous ones, one in April when I was stubborn as well, and I thought the market would continue lower after a little bit of a bounce, and so I was short. And I didn't stop out of that short position until May. By then it was way too late. And then another one in July when I was overconfident, trading overconfident after a great couple months, and I gave a lot back. And so I had two previous 15% or more, 20% sometimes, drawdowns. And so I knew what I needed was to have sort of like a sentiment. It's weird how your PnL sort of like tracks sentiment just like the market does. It's like we're all human, right? And I knew that I needed to have a sort of sentiment readjustment where I needed to readjust my expectations. I needed to readjust my mechanics, sort of in the same way where if you're in a slump and you're an athlete, you have to go back to the mechanics. You sort of like see people in a slump going into the gym, playing basketball, that is, going into the gym, just shooting free throws, just shooting like spot up threes. People like these like great shooters who are in a slump, like Reggie Miller, would just go into the gym in a slump and just hit like hundreds of threes until he left. And so I knew that I needed to get back to the basics. And so I decreased my position size. I stopped swinging things overnight. And I told myself I was going to give myself a little bit of rope, because usually when I have that bad of a day, I'm going to take the next day off. But I said, all right, Josh, you can do this. You can pivot from having this sentiment driven mentality and go back to a sort of basic mechanical mentality that has worked in the past to get you out of these holes. And that's what I did. And the rest of November, I traded with that smaller size. I didn't swing things overnight really. And I ended up having a really good month, a month where I didn't really hit too many home runs. I never made back $4,500 in one day. Instead, I would make back, 10% of that day to day. And I had, as you can see, 12 green days and 3 red days in November. And I think that my mentality, like trying to make back in a home run fashion, the loss is the best way to blow your account. And I know that, like, it's just like drilled into my head. And so I know that I just need to hit base hits after going down as much as I was. I needed to get myself in line with what had gotten me to that point. I haven't gotten to the point where I'm at right now by hitting home runs. Like, I have been trading every day, and my goal has always been consistency. I don't need to get it back in one day. And now I know from experience that if I have these big drawdowns, I know it's possible to come back from them, and I know how it's possible to come back from them. I know it's possible to come back from them by going back to the mechanics and slowly building it back up from the ground up. It's not going to come back in one day. So in the next 3 weeks, that's basically what I did. I don't really have to review like every trade that I was making. I won't. But basically what happened in November was I thought I took a step back and I started trading slower. And when I slowed down my process, I realized that I was forcing trades into places where they didn't fit. For example, I was trying to force trades into Amazon, into Shop, into Apple, and these names were just not moving. And so I was like, why am I trying to capture like these like $1 moves when they're simply like, there's no money being flowing into them. There's no flow. in the chart at all. The chart has no flow. It's actually consolidating, which is healthy. But once I recognized that, I stopped paying attention to them, and I just set price alerts for when they would break out. So like AMD, I set price alerts for outside of the ranges or at the low and high of the ranges. And then when they hit that, I would pay attention for a little bit. But I stopped trying to force trades into those little small openings. And instead I focused on ones that actually had flow, that had direction, that were not stuck in these consolidation patterns. So names like Plug, Grog, I say Grog, but it's like GRWG, NIO, DraftKings, Qualcomm, Boeing, like all these names, they have Roku, they had flow in their charts. And I should probably do a video on what that means actually later, but they were not stuck in a trading range. That's like basically what I'm trying to say. They were not stuck in that trading range. And so I was not sort of confined. Their movements didn't confine my trading. And I tried to play those names instead of the other names. And that really helped me, especially Tesla. I mean, like Tesla in the third week of November, it was announced that they were going to get added to the S&P 500. And so Tesla was actually trading in a range between 370, 360, and 450. It was trading between that range. And honestly, I said, don't touch it between this range. It's not helpful. Like, why would you get chopped out of all of your option premium while it's still in a range? You just wait for the breakout and then buy it. So the breakout level was something like 450, 460. Like once we got above that, and boom, the trigger was S&P 500 inclusion. And look, we went straight from 450 to 600 in like 2 weeks. And so not sort of confining myself to these ranges, not forcing myself to like squeeze money out of these, it really helped me. And it's something that I'm consistently learning. And I think it's a lesson that I had back in September review where I said, hey, look for the relative strength names. And I think that that's basically what I was doing in this market as well. And toward the fourth week of November, I started to pay attention to what will become, I think, more and more part of the narrative going forward. I started to pay attention to cryptocurrency, and I'm not a crypto trader. But I'm trying to enter that space, and I think that the fact that institutions are entering that space, the fact that sort of like bigger name traders who have been trading for 20 years are starting to pay attention to it again. And they're not writing it off in the way that they were in 2017, where, it's a bunch of retailers and grandma on Christmas asking how they buy Bitcoin. Instead, it's a bunch of banks and institutions incorporating it into their financial strategies and structures. And so I think that this is a development that is fueling a lot of the run up. And so I was able to play names like PayPal and Square and even Bitcoin and Ethereum in the later parts of November and in the beginning of December. So hopefully we can talk more about that in the future. Overall, I know that was like a breathtaking pace right there, but overall, I finished November feeling like I had found flow again. And I think that was the most important part of trading. And there's different like tricks I have to finding that. And again, like one of the tricks is taking off days of trading, because when you're out of flow, it just seems like everything you predict goes the other way. And so when that happens, you just got to take a step back, just got to observe for a minute and wait to see wait for a new week, because a new week brings new opportunities. There's literally every day there's hundreds of opportunities to make money in any market, and you just have to have the eyes to see it. And sometimes we're so sort of like blinded by biases, like I was, that we just can't jump on these opportunities. So that was sort of difficult for me, but I got out of it. And there were other things there are other names that I did not trade that in retrospect I probably should have traded, names on my solar and EV watch list. I felt like it was a little bit too speculative, a little bit too bubbly, if that's an adjective I can use, for me to chase, because I knew that it sort of reminded me of the weed run in 2018, where literally every day some weed name was up like 10%, and that's what it was in solar and EV, my watch list. And so I knew that eventually they would be deflated, and I didn't want to get caught in that sort of mess and ruin my flow again. So I stayed out of it until we sort of find the ones that are worth trading. And I think that in December, we started to find those again. Going forward, I still expect to do my December monthly review and also a yearly review where I review sort of like in a longer video, I guess, what I did, how like my sort of journey, my journey, my year of full-time trading, I guess. So y'all can look forward to that. And I hope that you have a great Christmas if you celebrate that, great New Year's, great other holidays, Hanukkah, what have you. And that you are able to tune into some of my live streams right here on this channel, Watch Josh Trade. You can tune into my Twitter, Watch Josh Trade as well, for more daily content. I'm literally always posting charts and my trades on there. And I respond almost hopefully instantaneously to comments or questions directed at my charts or chart questions that you have in general, as long as they're not all in my DMs about when you should exit and enter. I can't answer those, sorry. But hopefully the rest of the year brings good flow back into the market and back into my trading, I guess. And so far December has been going well. So I'm looking forward to doing that monthly review and the yearly one. If you have any questions, comments, please feel free to drop them in the comment section. Please hit a like on this video. It really helps me out a lot. My goal on this channel is basically just to hit 100 subscribers. I'm not like pushing out daily content, and I know I probably should be, but I'm not that good at it right now. But you know, I will be incentivized to make videos for you guys if I'm hearing that there's requests for certain types of videos. I do need to do a video on like technical analysis of breakdowns, but my problem is that I see so many good ones, so many good YouTube videos out there that I personally have learned from, that I don't know why I would make a video that's just like repeating what I've learned. But if you have specific questions for me, drop them in the comments, hit me up in my DMs, and I will try to answer them for you. All right, y'all, have a good weekend and peace.